I believe you need around $300,000 if you want to get started in small multifamily real estate. So, small multifamily real estate is at least 5 to 30 units. And depending on the market you invest in, and assuming the price point you want is around $1 million, why I say $300,000 is because if you're buying $1 million apartment complex, let's say it's a 20 unit apartment complex, you're going to need at least 25% down if you're buying it using a conventional loan. So 25% down, that's 250K. So on top of that, you need an additional 50K as a reserve and to cover any capex, any maintenance, any renovation. So this is $300,000 for turnkey small apartment complexes. If you're doing like value add apartment complexes, like what I'm doing, I need more than $300,000. I need $300,000 just for the renovation cost, and then around $100,000 for my down payment. So that's $400,000 total. So, that's kind of my thoughts. If you buy small multi-family, small apartment complexes traditionally, now if you do creative financing, you might be able to buy an apartment complex with a lot less money down, right? Like you could do with creative financing, you pick your terms. I always say your price, my terms. So I give the seller their price, but I want my terms. And typically my terms is a low down payment. I typically want it at 10% or less. Ideally, the less the better. But even on top of that, you're still gonna need money for renovation. Like there's nothing around it. Like you cannot depend on the cash flow of the apartment complex to fund your renovation. That's a huge mistake that my mentor taught me. So I never made that mistake. But it's a huge mistake that people make. Like, do not rely on the cash flow to renovate the property, because the moment you take over the property, you might have like 3 to 4 tenants leave. Then once they're gone, that cash flow is now gone. And then now you have no money to renovate the apartment complex, and that's when distress happens. So typically, you want the majority of the renovation cost up front, right? I say at least if you need $100,000, at least have 80% of that renovation fund up front. And then for the remaining 20%, you can consider using the cash flow. But like I said, you don't want to depend on the cash flow to renovate it. If you do get cash flow, that's the cherry on top, but have the money up front. So now, probably a question that everyone's saying is, well, how do I save up $300,000? That's a lot of money, right? I'll be honest, it's a lot of money. And, this is why people who get in apartment complexes usually are a little bit more advanced, usually own some single family homes. This is kind of the typical make. And it's intimidating, right? Like having $300,000, that's a lot of money. It seems impossible. But, how I got my money, my $300,000 to invest in multifamily was actually through single family homes. So, how it kind of started off is, I'm in California, which is a high cost of living market. The average cost of a single family home is $1 million. So, back in 2017, I bought a property to house hack. I'm making a couple of videos about how I look for properties that you can house hack on Zillow, on Redfin. I bought all these on market on the MLS. And, that's how I got my start. I basically put 10% down on a single family home. I lived in the master bedroom and I rented out the 3 other bedrooms. So I typically targeted 4 bedrooms plus, because the more rooms you have, the more rental income you get. And then 4 to 5 bedroom single family homes will appreciate better compared to a 3 bedroom house. Because if you have a family of 4 or 5, then you need at least 4 bedrooms um, to take care of that family. So I always targeted, 4 bedrooms plus. To be honest, the price between a 3 bedroom and a 4 bedroom doesn't vary that much. So why not pay a little bit extra? A couple of maybe $50,000 extra to get a 4 bedroom house. You can get additional rental income, and it appreciates better long term. So I always just kind of had that mentality and that mindset when buying it. So I bought a place. I just thought it was a place for me to live. I never thought I'd be investing in real estate at the scale I do today. 90 units, but basically I lived in that property I was collecting the rental income, which covered my mortgage. I just had to cover property tax, insurance, utilities, which came out to be about $1,500 a month. I was getting $3,000 in rent, and because of that, I was working a high income, W-2. So it helped me save money. And then I kind of forgot to mention, but how I say that from the down payment, the 10% down payment on the house, which was $80,000, was honestly it's not a sexy answer, but I just worked, right? I just worked my pharmacist job, and I would live very humbly so that I could save money every month. I was very fortunate that I was able to live with my parents for free, so it helped me save money more, helped me pay down my student debt faster. And it's not convenient, right? Like, it's not fun living with your parents. There's no privacy. There's no growth. They still treat you like a kid. But I just knew that if I kind of made this sacrifice today, then pretty much it can help me pay down my student loans. I had $250,000 worth of student debt, so I was able to pay it off in 4 years. After I paid that off in 2017, I just maintained that same lifestyle. I was able to save the money towards a down payment now instead of paying off my student loans. And then I just worked. I tried to increase my income in my W-2 job, so I would job hop for higher income. So it sounds, there's no magic formula. It's just literally, I got a job, try to raise my income, live below my means. You have a high savings rate. I think I was saving around 50% of my income. Um, I would try to work overtime shifts. So, getting your initial start is the hard part, to be honest, right? Like, can you stay disciplined to save that money to get that $80,000 to $100,000 to down on a house? And, a lot of people struggle with this portion, and I get it. Not many people are fortunate to live with family. Maybe you have to support your family, right? Like, I know a lot of pharmacy classmates, they have to support their family, but regardless of what your savings rate is, I think the concept is whatever you take home, you have to be able to save some of that money, whether it's $1,000 a month, 2,000, 3,000, 4,000, 5,000, and then you can just do math, right? If you need to save $80,000, then you work backwards based on your savings rate and how long it would take you to save that money. And I would pick up overtime shifts because you get paid time and a half, or you can pick up a per diem job. So yeah, it sucks. Like, you have to work for like 2-3 years and um, save, and even becoming a pharmacist is not easy either, right? So you can kind of see, like, I'm not an overnight success. Like, I busted myself in college to finish undergraduate in 2 years. I busted myself in 3 years of pharmacy school. I busted myself as a pharmacist to try to move up. So I've been doing all this work since like I was 18, to be honest. So the past 15 years. So anyways, basically you save up for your first house, right? $100,000. You put that down payment on a single family home that you house hack, right? And at that point, you live in the master bedroom, you rent out the other 3 bedrooms, helps cover most of your mortgage, you reduce your living expense, but where the wealth is really made is in the appreciation and the equity in the principal pay down on the loan, right? Like, that's called the shadow wealth. You don't see it, right? It doesn't make you feel good today, but it's kind of a forced savings account when you own a house. Like, you're forced to pump money into there. So when I was doing that, fast forward a year later, 2 years later of owning that property, every year that I owned the property, it appreciated by $100,000. And it went that way for 5 years. So I bought that house for $800,000 in 2017. By the time it was 2021, it appreciated by $400,000, right? And then I just was living in it, and then I moved out of it, and then I rented out the whole house. So I had tenants pay down the property for me, pay down my loan for me. I was cash flow negative on this property in California, so I had to put, like additional $500 out of my own pocket as well. But it was okay because I worked a full-time W-2. And then from there, um, appreciated by $400,000 over the next 4 years. So it was worth 1.2 million. At that point, I did a cash out refinance. 2021 interest rates were low, so I did a cash out refinance and I pulled out a bunch of money. right? Remember I said you need $300,000 to get started in um, apartment complexes. Well, I put $100,000 into the property. It appreciated by $400,000. I have $500,000 of equity. So during the cash out refinance, not only did I lower my interest rate from 4% to about 3%, but I was able to pull out $300,000. Right? So I put up my down payment and I pulled out some equity on top of it. And yes, my monthly loan payment went up despite lowering my interest rate, but had access to this money now, right? I had access to this $300,000, and now that $300,000, I use that to buy my first apartment complex, right? So I put $100,000 down, and then I had $200,000 allocated for renovation, right? So that's the $300,000 I had. So like, and don't get me wrong, I'm still working, right? So that took me a 4 year window of doing that, right? And I was still working, still saving. So I was able to save another $100,000 through my W-2 job. So I had $300,000 for renovation, all ready to go for the property, plus $100,000 down. So that's what I mean by real estate compounds, right? And it gets easier over time, right? Like, yes, it was very hard to pay off my student debt, right? $250,000 student debt. I could have used that to buy an apartment complex, but I was so focused on paying down my student debt, right? It's very crippling. I get it, right? You want to pay it off, and once you're free, then you can think about other things. That was my mentality. Yes, it's hard to then, at that point, continue to live humbly for at least another year or two to save $100,000 for your down payment. It was challenging. Like I from 2013 all the way to like 2020, that's 7 years. I basically lived very humbly, right? I basically lived like I was a college student. And it's hard to do that. It takes discipline to do that, right? Like I had a lot of friends. The moment they started making money in 2013, bought a nice car, fancy vacation, nice clothes, everything nice, Michelin star restaurants, knew everything, right? They're just spending money left and right. And it's hard for me to sit on the sideline, save my money, and live very humbly. I basically live the same lifestyle as if I was still in pharmacy school, still in college. And it's not easy. I drove the same car. Like, I still wear the same clothes. I can't go on super nice restaurants all the time, right? So it's challenging. But now I'm starting to see the rewards pay off. I saved $100,000, pay off my student loans, had $100,000, put it into this house, and that house appreciated crazy. California has crazy appreciation, right? And then from that appreciation, I just continued to work, continued to house hack, and then I did a refinance. 4 years later, and I got my $300,000 to buy my next apartment complex, right? So I literally described to you an 8 year process, right? Like when people reach out to me, they want that instant gratification, right? Like, hey, I have no money, I want to buy my first apartment complex, and usually my conversation is, well, you need $300,000 to start. And then they just look at me like befuddled, right? Like, and I just said, yeah, like that's what it takes. It's not easy, but we can get you on a plan. It may take you 8 to 10 years to get your first apartment complex, and you may have to start off with single family homes first, like me, and then organically scale up, right? Like you could take that single family home, sell it, 1031 exchange it into your first apartment complex, right? It's like playing Monopoly, right? You buy one greenhouse, eventually you have four greenhouses, and you trade up to hotel. That's a 1031 exchange, right? So it's not sexy, but one multifamily deal is all it takes to change your life. Check out my video. I have a video talking about it. You just need one. So if just one deal is all it takes to change your life, isn't it worth it waiting 10 years? 10 years of sacrifice, 10 years of discipline, 10 years of living humbly while others are living lavishly. So that's why I say, like, it's okay to, everyone's at different phases. Like, I've been doing this for a while now, right? So now I can buy apartment complexes. And once I do value add, I do cash out refinance and buy more apartment complexes. So it gets easier over time. But in the beginning, it's hard, right? Like, I get it. Like, So I was coaching one of my students, and he just asked me like, "Hey, how much money do you need? I think we can save $100,000." And I just said, "Okay, well, you have $100,000, but you need at least $300,000 to start, right? Like 300,000. You need $300,000 to start." So he was just like, "Well, how do I do that?" So how I did it was a two-pronged approach. First, I bought a single family home, right? If you live in a single family home yourself for 2 out of the 5 years that you own it, I think you get a certain tax advantage where you don't have to pay as much capital gains tax, up to like $200,000. This is off the top of my head, just to verify that on Google or with a tax expert. But imagine you own a property for 5 years. You lived in it for 2 years as a primary residence, and then after 2 years, you house hacked again. You moved to another property, and you were self in 5 years, or you would get that money tax free, or if you 1031 exchange it, it's tax free, and you can trade that up into an apartment complex. So I literally was telling one of my students, hey, you have two options. Option number one is yes, you could save money, and they told me their saving rate was, let's say, $5,000 a month between a husband and a wife. So to save $300,000, you take $300,000 and you divide it by five, right? So, or 5,000, and that's how many months it's going to take you, right? So you know, I can't do mental math anymore, but $300,000 divided by $5,000, it's going to take you 60 months or 5 years to save up $300,000. Instead, if you have $100,000 today, or to save $100,000, it would take you, what is that? I think, is that 20 months? Yeah, 20 months. So a year and a half. So save $5,000 a year, a month, for a year and a half. Take that $100,000, house hack a primary residence, right? They live in California as well. Find a house that's $1 million. Put 100K down. You live in it. You rent out the other bedrooms, and you hold onto that property for 5 years, right? If you can, it's okay. You can live there the whole 5 years, house hack it for 5 years, and then once you're done, in 5 years, I would say you get at least $300,000 of appreciation. Like the moment interest rates drop down again, interest rates are high right now, right? 7%. The moment interest rates drop down to like 3, 4, 5%, believe me, houses are going to appreciate again, right? Inventory is still low. So at that point, over that 5 year period, if you have $300,000 of appreciation, or even $200,000 of appreciation, at that point, between the $100,000 you put into the deal and the 200 you appreciate, you now have $300,000. You can 1031 exchange that into an apartment complex within 5 years, right? And remember, it takes 5 years of saving $5,000 a month to do that. But you can supercharge that journey if you buy real estate, let it naturally appreciate, have tenants that are paying you monthly rent, and you're still saving that $5,000 a month. That's how you exponentially grow, right? Because now I'm saving $5,000 myself, and I'm getting paid $3,000 from my tenant. But yes, that money goes to the mortgage, but that's how you are putting money into your piggy bank, which is your single family home. That if you decide to sell it or 1031 exchange it, now you have access to that money to go buy an apartment complex. So that's why I tell everybody, like, yes, like if you have $30,000 today, by all means, you can go straight to apartment complex. But if you don't have $300,000, which is the majority of people, save $100,000, however long it takes you, year and a half. If you're saving 5K a month, 3 years, if you're saving $2,500 a month. Buy that house, own the house for 5 years, and then you trade up to an apartment complex. That's how I got started, right? That's how I literally got started. So unless you can figure out creative financing, right? Like, but even then, creative financing, you're gonna need some money for renovation. It's not like, hey, I just put zero down in the deal. I need no money in the deal. You need to put money in for renovation. So hopefully you found some value. Hopefully you found some inspiration. And hopefully you don't find it daunting that you need $300,000. How to save that $300,000 to buy your first apartment complex. It's doable, but you have to go in steps, right? Step one, save the money. Step two, buy a single family house that you house hack. Step three is you can trade up that single family home into your first apartment complex. And once you stabilize that apartment complex, that's when you have financial freedom. That's when you have that cash flow, right? Imagine 20 units times $5 a unit. That's 10K a month gross, right? If you try to pay up that property, you might net 5K a month. That might be enough to replace your job, right? So that's what I mean. It's not easy. It's not going to be overnight, but if you slowly work at it and you have a plan and you work with somebody who's done it before, like me, that's how you get focused on a plan and you follow that plan and time flies, right? Like I bought my first apartment complex 2 years ago. Time flew, right? Like really flew. Like I'll be honest, it really flew. So create a plan, stick to the plan, don't deviate from the plan. Yes, it's gonna suck. You're gonna live humbly. Yes, it's gonna suck. You can't be as lavish as your peers and your friends. But if you put in that sacrifice, if you sacrifice for 10 years and live a life that others aren't willing to do, that's when you create a financial future that not many others will have. Right? Like fast forward to today, right? Like once I'm done, I'm stabilized after my 10-year period of owning real estate. I owned for 7 years now. I'm gonna have financial freedom and have the option to leave my W 2 job. Or if I don't mind working my W 2 job, then I can keep on building and building and building. Right? So that's what's powerful about real estate. Hopefully you found value. Hopefully you found inspiration. Hope to see you in the next one.